Hello everyone. Today we are going to discuss a new topic, Indian financial system. What is finance? All of us know that finance means monetary resources. And what is financial activity? That it is acquiring and employment of funds. Then, what is financial system? It facilitates the transfer of funds from savers to the borrowers. In other words, we can say that it acts as an intermediary between the suppliers of fund and seekers of fund. Indian financial system can be divided into organized financial system and unorganized financial system. Unorganized financial system consists of indigenous bankers, local money lenders, nidhis, chits, etc. We have to concentrate more on organized financial system. And organized financial system includes financial markets, financial instruments, financial institutions, and financial services.
Let's discuss financial market. What is a financial market? It's an institution or arrangement that facilitates the exchange of financial asset. Financial asset means deposits and loans, stocks and bonds, etc. Financial market can be divided into money market and capital market. Money market is a market for short-term debt instrument and capital market is a market for long-term equity and debt instruments. Capital market can be classified into primary market and secondary market. Primary market is also called new issue market. That is the shares initially issued in this market. And secondary market also called stock exchanges. We will discuss these things later on. Now I am giving you an overview of the Indian financial system. Second component of Indian financial system is financial institutions. It is again classified into banking institution, non-banking institution and specialized financial institutions. Banking institution again classified into commercial banks, cooperative bank, regional rural bank, foreign bank. In that, commercial bank have another classification, that is private bank and public bank. Non-banking institutions include investment institution, that is public and private mutual funds, private and public life insurance companies, non-banking finance companies, that is NBFC and lease finance companies, venture capital funds, then housing finance companies and microfinance institution. These are the institutions included in non-banking institutions. There is one more classification, that is specialized financial institution. What is specialized financial institution? That is state level institutions like State Financial Corporation, SFC, and State Industrial Development Corporation, then IFCI, ICICI, IDBI, etc. Then NABARD, that is National Bank for Agricultural and Rural Development, then National Housing Board, then SIDBI, that is Small Industries Development Bank of India. All these are example for specialized financial institutions. Third component of financial system is financial instrument. It includes money market instrument and capital market instruments both. And fourth component is financial services. Financial services includes merchant banking, mutual funds, credit rating, banking services, insurance services, venture capital, leasing, hire purchasing, securitization, stock broking, factoring and forfeiting, portfolio management, and corporate counseling. Financial companies offer various services to facilitate transfer of money from savers to users. All those activities in this process of transfer are financial services. Thus, financial service is a process by which funds are mobilized from the investors and given to the customers, particularly corporate customers. Banks, insurance companies, stock exchanges, leasing companies, unit trust, housing finance corporations, mutual funds provide these services. Financial services can be classified into fund-based activities and non-fund-based activities. A fund-based financial service involves credit offered by banks in the form of loans, overdrafts, and other cash transactions. In other words, we can say the fund-based activities provided by the service providers include activities in the primary market and secondary market. Actually, the primary market deals with the new capital issues by the companies such as equity shares, preference shares, and debentures. And secondary market consists of stock exchange activities, that is the secondary sale of securities. Thus, the secondary market actually promotes the growth of primary market and helps in capital formation. It provides liquidity to the investors to sell the securities at a higher price. So, the activities include in the primary and secondary market constitute the fund-based activities. The fund-based services also called asset-based services, and some of the examples for fund-based services are first one lease financing, second hire purchase, and next consumer credit, then bill discounting, venture capital, housing finance, insurance services, factoring, and securitization of debt. Next is non-fund based activities. Today, customers expect more from financial intermediaries rather than mere provision of money alone. Customers expect assistance and consultations during emergencies and difficult time periods in business. So, the financial intermediaries have started to act as experts and consultants by offering consultations and assistance. These are fee based activities, and intermediaries charge the customer for the services offered. These are also called as advisory services. Some of the important fee based services are issue management services, portfolio management services, corporate counseling services, advisory services for mergers and acquisitions, capital restructuring services, credit rating services, and stockbroking services. In this video, I intend to give you an overview of the components of Indian financial system. That's why I am not concentrating more on capital and money market instruments. Here I am giving more emphasis on financial services, both fund-based and fee-based. We would be discussing the important services one by one in the coming video. Thank you.